Ladies and gentlemen, good day and welcome to the Frog Cellsat Ltd Q2 and H1 FY25 earnings conference call hosted by Cellsat Securities Ltd. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the call to Tushar from Cellsat Securities. Thank you, and over to you, Tushar.
Thank you. Good day, ladies and gentlemen. On behalf of Cellsat Securities Ltd, I welcome you all to Frog Cellsat Ltd Q1 and H1 FY25 earnings conference call. The company is today represented by Mr. Concall, Managing Director, Mr. Umesh Singh, Chief Executive Officer, and Mr. Charanjit Kalra, Chief Financial Officer of the company. I would now like to hand over the call to Mr. Trivedi for his opening remarks. Thank you, and over to you, sir.
Thank you, Tushar. A very good day to all of you, and welcome to the Q2 Financial Year 25 earnings call. As we are here to discuss Frog Cellsat's performance and the significant milestones we have achieved over the past few months. Firstly, I would like to state that with over 2 decades of expertise, Frog Cellsat has evolved into a leading design house and manufacturer of radio frequency equipment, catering to the full spectrum of mobile networks from 2G to 5G and beyond. Our products, including RF repeaters, active DAS system, and antennas and accessories, play a critical role in ensuring seamless connectivity for millions of users worldwide. These essential components are integrated into telecom towers and public safety networks, providing both reliability and scalability. Today, our portfolio boasts over 27 plus products, making us a comprehensive solution provider in the RF equipment sector. Our commitment goes beyond manufacturing. We deliver end-to-end solutions covering planning, designing, and installation, supporting mobile operators in optimizing their network infrastructure. Notably, we have successfully launched our interference mitigation system, a testament to our dedication to driving superior telecom services. Moving to our financial highlights for Q2 Financial Year 25, our revenue from operations this quarter reached rupees 438.1 million, up from rupees 359.4 million, marking a 21.9% quarter-on-quarter increase and a 24.6% year-on-year rise. The growth has fueled by robust revenue realization, the accelerated rollout of 5G services, and heightened demand for network coverage solutions. Our EBITDA for the quarter came in at rupees 32.2 million, reflecting a 27.9% quarter-on-quarter growth, with an EBITDA margin of 8.3%. While our manpower expenses increased in Q2 as a strategic investment in expanding our workforce, this positions us well for future projects delivering in upcoming quarter. Additionally, the issuance of employee stock rewards in Q2 underscores our commitment to retaining and nurturing talent, an investment that, while impacting short-term margins, will fuel growth across both our manufacturing and services setup. Our PAT was reported at rupees 41.3 million from rupees 11.7 million, representing a remarkable growth of around 250% quarter-on-quarter and 60.4% year-on-year increase with a PAT margin of 9.4%. Our half-yearly financial numbers. Our revenue from operations increased by 16.3% to rupees 797.6 million, compared to rupees 685.5 million in H1 financial year 24. Our EBITDA stood at rupees 64.5 million with a margin of 8.1% as compared to 12% in H1 financial year 24, reflecting the impact of strategic investment. Our PAT for H1 financial year 25 was rupees 53.1 million, up slightly from rupees 52.7 million in H1 financial year 24, with a PAT margin of 6.7%. Business update. Now moving on to our business update, we are proud to announce that Frog Cellsat has recently secured a rupees 31 crore order from Metro Telworks to enhance mobile coverage at Mumbai International Airport with a completion target of December 2024. We have also secured a rupees 16 crore contract for the deployment of our One DAS system at Navi Mumbai International Airport, marking our third major airport project. Furthermore, the deployment of One DAS at Chaudhry Charan Singh Airport in Lucknow has been successfully completed. Order book and future outlook. Our order book at the end of Q2 financial year 25 reached rupees 1100 million, a clear indicator of the trust our clients place in our solutions. This momentum, coupled with the pipeline of projects, positions us well for continued revenue growth. We expect Q3 to be particularly strong, with significant project billings lined up for completion. At the recent India Mobile Congress, we unveiled key innovations designed to meet evolving market needs, such as Active DAS for 5G, the Smart Mini Booster for IoT, VHF repeaters for railway, and noise shield solution. These new offerings are expected to contribute meaningfully to our revenue streams in the coming quarters. Industry developments. As we can observe that the telecom industry is undergoing significant capital expenditures, with leading operators like Airtel and Vodafone Idea upgrading their 4G and 5G networks. This trend provides us with ample opportunities to capture market share and growth alongside these operators. By aligning our product offerings with their network expansion efforts, we are confident in our ability to capitalize on the growing demands for advanced telecom infrastructure. Conclusion. As the industry continues its capex expansion, Frog Cellsat is strategically positioned to seize new opportunities with our innovative solutions. We are confident in our ability to scale operations, enhance our market presence, and consistently deliver value to our stakeholders. Thank you for your time today. I am happy to take any questions you may have.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad. First question comes from Siddhartha from Caprice. Please go ahead.
Yeah. So hi sir. So congrats for the great set of results. So I'm new to this company, so just wanted to understand what exactly is our mode here. So what are we doing different, compared to our competitors?
Right. So hi Siddhartha. So look, firstly, we are a fully Indian company having product designed in-house by us, and this is and the coverage solutions which we are providing. So we are the only Indian company who is manufacturing these kind of products. There is no other Indian company who is manufacturing these kind of products in this range. So this is very unique for us, and that gives us leverage. But, now there is a focus on Make in India products, on products which are certified by government as NSDTS certified, National Security certified. So those kind of things give us an edge and makes us a vendor of choice by the customers.
So one more question, sir. If you look at our customers, so most of our orders, we cater mostly to Airtel, right? So just wanted to understand, so there is significant client concentration over there. So just wanted to understand your strategy here. How do you want to diversify going forward?
Right. So look, the things are changing slowly but surely. If you see our airport orders that we have been receiving, and which are the major project orders, those orders are coming from neutral hosts or system integrators. So like Noida Airport project which we have received, that was from a neutral host called ACES. The projects that we have received for Mumbai Airport or Navi Mumbai Airport, both of them we have received from a system integrator. Project for Delhi Metro, we have received from Motorola, which is a system integrator plus equipment provider. Project for Bangalore Metro, we have received from L&T. Right, so our solutions are now being taken by a lot of system integrators and neutral hosts, and that's the upside which we are seeing, which is making us less dependent on mobile operators.
Okay. So, and one last question from my end, sir. So our margins have been quite volatile, and you have guided for 12 to 13% margin, whereas in the first half of the financial year, we hardly have hit 10% or 9%. So, do we expect the margins to significantly go up in the next coming 2 quarters? And so I just wanted to understand the reason behind these kind of fluctuations.
Right. So look, firstly, the fluctuation happens, the kind of product mix that gets built in that quarter, right? So we have, as I mentioned, we have 27 plus products. So different product comes with a different margin profile. So it varies from what kind of product mix has been built in that quarter. As far as going forward is concerned, if you look at it, we are going to see most of our predicted growth in the next 2 quarters in revenues, whereas the fixed cost remains same. All these large projects are going to be getting to be built in these coming 2 quarters, majorly in Q3 actually. So and there is not going to be so much upside on the fixed costs. So fixed costs will stay same. And that's where it's going to make difference, and we are going to achieve still our targets of 12 to 13%.
Okay. Thank you, sir. Thank you. That's it from my end. I'll join the queue. Yeah.
Thanks.
Thank you. Next question comes from Narendra Shah from Robo Capital. Please go ahead.
Hi, sir.
Hello.
Am I audible? Hi.
Yes, Narendra, you're audible.
Yeah. Thanks for the opportunity, sir. So a broad-based question, right? So going forward 3 years down the line, where do we see our company in terms of revenue and PAT? Do we see it as a 500 crore turnover company with a 50 crore kind of a PAT? What's our vision for the company moving ahead?
Yeah. So look, this is what you're asking is already been given by us some time back as our target. That by financial year 28 we are targeting to achieve 500 crores revenue, and margins in the range of 10%. So that's what we are aiming at for financial year 28.
Okay. Talking about big project coming up for building.
Sorry, can you please be a bit louder? Hello? Narendra,
Narendra,
I think Narendra.
Yes, there is no response. So shall we move to the next question?
Yeah, I think let's do that. If he comes back, then we can take him on board later.
Sure, sir. Next question comes from Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, Raj.
Hello. Actually, I'm new to the company. I just wanted to understand the business of the company. So, is the order book fully based on L1?
Okay. Raj, so we are a company providing solution primarily for the coverage enhancement of mobile networks.
Yeah.
That's what we do. Your question is if it is fully based on L1, so that's not the case. We do need to be competitive, but when you work with customers that we work with, they also look at the quality. So like Airtel or Vodafone, or Jio or Neutral Host, they need to look at quality as well, and so it's a mix of price and quality and the specifications.
All right. So, as of now, you have an order book of 110 crores, right? So, how much of this 110 crores is based on L1?
I will say, none of them is based on L1.
Acha.
Yeah.
Okay. And how much is the order pipeline?
See, we don't have a visibility of order pipeline as such. We don't give that order pipeline number. We are, quarter on quarter, we are only declaring the number of our order book. So that's the practice we have.
All right. And how much is the order execution timeline?
It depends on, again, from customer to customer. If you ask about this 110 crores pipeline, 110 crores order book that we have at the end of September, a good guess is at least 65 to 70 crores of this should get billed in Q3 and remaining should get billed in Q4.
Hello. I didn't get what you were saying. Can you repeat it again? How much of it will be executed in Q3? 50 crores around?
No, 65 to 70 crores should get executed in Q3 and the balance should go to Q4.
All right. So overall 110 crores will be executed by FY25 end fully?
Yes.
Understood. And sir, since we design our equipment in-house, so how much of the raw material is imported?
Look, again, it depends on product to product because we have 27 plus products. But broadly, if you look at it, then I think overall percentage, if you look at it, it should come to 50 to 60%.
And the 50 to 60% raw material will be imported, right?
Yes.
All right. And I wanted to know how much of like a value addition do we exactly do? Like, are we an assembler exactly? Do we add any value in our products from our end?
Look, this is all our in-house design products. So depending on how you calculate value add, But if you do value add calculation as per what Government of India does, our value addition is more than 50%.
Okay. And sir, how many SKUs do we handle?
We have 27 plus products as of now.
Mm-hmm.
But then there are sub-variants of, let's say, digital repeaters has few sub-variants which are there. DAS can be configured in different forms. So those are additional to that.
Understood. And so since we design our product in-house, so it needs to be approved from the customer end, right?
Yes.
So for example, Geo is there. So once we design our products, then we go to Geo and then they approve it.
Yeah.
And after the approval, we get the order, right?
Yes.
And do we get the order directly from OEM or is it from a tier 1 partner?
No, so I didn't get your point. OEM or tier 1 partner. We get
what I'm trying to say is, do we get the order directly from Geo or Geo gives orders to someone else?
So we get orders directly from mobile operators, Jio, Airtel, Vodafone, directly from them.
Okay.
Yeah.
All right. And sir, I wanted to ask, who are our peers in this segment?
So there are, mostly international companies, like there is Comscope. Comscope has, by the way, sold their division of active DAS to another international company called Amphenol. So for a few $1 billion. And then there is Solid, which is a Korean company. Then there is what you call Pros. Pros is a Chinese company. So yeah, these are some of the main contenders.
So sir, for example, if Geo wants to give an order, so why does Geo give an order to us and not to the international company? Is the competition based on the pricing or quality, or like I wanted to understand what exactly differentiates us?
Okay, so look, it's for different product, it's a different differentiator again. And now if we take it to, let's say, the DAS product or repeaters, then basically for any active product, one needs to have firstly the preferences for Make in India. There is a lot of push by government for that. Okay, so and we are the only Make in India company for these products. Second is for these products, there is national security requirement is also there. So national security certification has to be there. And that's what we have, being a local company. And that also gives us an edge. For other items like accessories, let's say, jumpers or CIPRI cable. Now, these international companies have their own, if they bring in from outside, they take a lot of shipment time. Now, these are required, immediate basis. So being a local, we can provide it locally to these customers. We have been supplying these items consistently for last, 6-7 years to them. And they are happy with the performance. They are happy with the quality. So yeah, it's just simply a continuity.
Understood. And then I also wanted to understand, for example, if we take a mobile tower,
Can you join back the queue?
Yeah.
Okay, sure. Thank you.
Thank you. Next question comes from Akshita Dev from Vibhog Commercial Limited. Please go ahead.
Yeah, hello. Am I audible?
Yes, Akshita, you're audible.
Okay. Yeah, I just wanted to understand. I understand we don't give order pipeline of the future, but can you see what type of clients or what, where exactly orders would be coming from, and would there be any margin difference depending on which customer is giving you the order?
Look, mostly, we do business with mobile operators and neutral hosts or big civil contractors who are designing airports or metros. So these are our potential customers. So to say mobile operators anyway, Airtel, Vodafone, Jio, they are our customers. Second, the neutral hosts are like companies like Aphase or Crest Digital, Indus Towers. So those are our customers, or system integrators like Metrotel or L&T. So these guys are our customers, or for that matter, Adani. So they are all potential customers, or they are our customers.
But I also understand that we had done trials with Jio, right? A while back. Did anything come with it?
Yeah, so we are doing business with Jio. The volume is still small there.
I think by this time we expected for the volumes to be picked up, right?
Yes, we are working with them, and we expect the volumes to be picked up. But as of now, they have not. They are still small.
Any reason for the hiccup there?
Look, things take time to build up to develop. So we are new to their system.
Any timeline on your side that what you believe will probably be the next?
No, it's not possible to provide any timelines on that.
Okay, no problem. Thank you so much, and all the best.
Thanks. But to tell you that is our projections are not dependent on that. Our growth projections are not dependent on that. So it's not taken into our growth projection. If and when that will happen, it will be over and above our projections.
Okay.
Thank you. I request the participants to restrict with 2 questions in the initial round and join back the queue for more questions. Next question comes from Rohan Patel from Turtle Capital. Please go.
Hello.
Yeah, Rohan, hi. Yeah, if you can be a bit louder, it will be better.
Yeah, sure, yeah. Just in your opening remarks, you mentioned that you have successfully launched the IMS. Is that right?
Launched what? Sorry?
IMS, Interference Mitigation System.
No, so what I mentioned is that we have launched at the India Mobile Congress active task system for 5G, Smart Mini Booster for IoT, VHF repeater for railways, and noise sheet solution.
So, as I understood that in one of your presentation, you mentioned that you are also working on IMS. So can you share the progress in that?
Yeah, so look, it is the trials have happened. If the commercial discussion is still on, and it's not yet concluded, so to say. So that's where it is.
So can you give us a time frame when this IMS will get, start reflecting, and when you will start working on that, like commercial orders? When will we start getting commercial orders?
Look, as of now, we don't have a timeline. See, if it happens, it can happen tomorrow. If it don't happen, it cannot happen, maybe 2 quarters. So we don't have a timeline still for that, a firm timeline. But yeah, we are working towards it.
Okay. And another thing was regarding your SMT line that you were going to, start with as manufacturing as a service. So can you share progress over there?
Yeah, so the equipment has been ordered now, and delivery timeline for that is by Q4. In Q4, we should be getting the deliveries for it, and but in Q4 it should be implemented.
Okay. So then if this business, this vertical of will be reflected in FY25, if I'm right?